Three things in 3 minutes. Let's get it. So, I recently had an opportunity to sit down with the CEO of the mortgage bank that we work with. So, just to keep in mind, LaSalle Mortgage is a brand. We are a DBA, but we don't have a vault with millions of dollars in the basement. We actually have to operate through these larger mortgage platforms. The company that we are now affiliated with is called CMG Home Loans. The CEO of that company, the president of that company, I asked him, is the CFPB RIP? Is it dead? And what he told me was basically his understanding is that the Trump administration has effectively shut down that whole operation, but they've been through this before. They remember previous periods when things were quote unquote unregulated, and it is his opinion that the banks should follow every single rule that was put in place during the Dodd-Frank Act, because they are worried that if they take even the slightest misstep, there could be a swing in who's calling the shots in the future, and they could be liable. So that's pretty interesting. I wasn't really expecting to hear that. One of the other things I want you guys to keep in mind is one of the most popular things, loan programs that we've been able to put forward in the last 2 years are these CRA mortgage programs. These are basically Community Reinvestment Act deals where mortgage companies or banks, Citi, Chase, PNC, First Republic even had one of these, but basically they were incentivized to lend in low to moderate income census tracts or minority areas, because it then allowed them to show the federal government that they were investing widely so that they could get other things approved for their bank, whether they wanted to roll out a home equity line or buy a bank or have a new division of something. A lot of the math behind how they determine which homes, which areas are eligible for lower rates, no mortgage insurance, higher lender credits. You've seen these, right? In, quote unquote, the hood. A lot of the ways that they look at that is by determining how many people live in a census tract, how many people are Black and brown or Hispanic, and as long as more than 50% are minority, it qualifies. Well, I'm stepping out on a limb to say this is something that I feel like might be in the crosshairs of the Trump administration going forward. So do we see a shift in whether these CRA programs are available? Do we see a shift in how they're determined? Keep an eye on that. It's going to be really interesting to see. A tip on social media. If you're posting, I have seen a huge shift away from highly produced, edited videos with lots of graphics flying around, great lighting, to videos that people just turn their camera on, face it to them, and talk. We have BS meters now. When you do overproduced stuff, people just scroll right through. If you're thinking about social media, I highly recommend you just turn the camera on and talk. Tell the story of yourself. What's going on? Be vulnerable, be open, be transparent. That is what is working on all platforms right now. And then finally, mortgage rates. Mortgage rates have ticked down. They were up in the low sevens about 2 months ago, and now we're kind of 6.625, 6.75 for most loans, average loans. Some people are doing better, some people have higher, but rates are improving, and it has a lot to do with the fear of a recession creeping in. So keep an eye on things. I'm feeling good about it. It feels like buyers are brushing off their pre-approvals, and we're busy. So love to see it.